what makes life interesting is we don't know how it's going to work out. I think we do know we're flirting with serious trouble. I think we also know that some of our earlier fears were overblown.
Hey guys, welcome back to the channel. In this video, I want to share my thoughts on inflation and how the high inflation and rising interest rates we're seeing right now affects my investing philosophy and my decision making when it comes to my portfolio. Right now, there's hundreds of videos going around about how inflation is going to bring the end of the world. And investors everywhere seem to be freaking out about the current inflation rate, as well as the rising interest rates this year. But in this video, I want to share a different and more calm perspective on inflation. And I'll be talking about it mainly from an investing perspective, and I'll go into how it affects my investing decisions going forward. As always, if you enjoyed the video, please consider hitting that like button and subscribing to the channel. So we all know what inflation is. Essentially, it's the rising costs of goods and services, which year after year causes your hard-earned money to lose its purchasing power. Quite simply, the best way to combat inflation is to compound money at a higher rate of return than the inflation rate. And you can do this by owning assets such as real estate or shares in a business. At the recent Daily Journal annual meeting, Charlie Munger answered a fair few questions about inflation, and I have some clips here of some of his best responses.
His question is, do you think it's likely that we will experience a major increase in interest rates in the upcoming decades, like, for example, in the period between 1950 and 1980?
Well, that, of course, is a very intelligent question and a very difficult question. When you print money on the scale that modern nations are printing it, Japan, the United States, Europe, etc., the Japanese bought back not only a lot of their own debt, but a lot of their common stocks. So the Federal Reserve System, you can't imagine how much money printing Japan has done. And they haven't had all that much inflation, and it's still a very admirable civilization. In fact, you could argue that Japan is one of the more admirable civilizations in the whole world. And in spite of all this very extreme government money printing they've done, and they haven't had terrible consequences. Now they've had 25 years of stasis with living standards not improving very much. I don't think that came from their macroeconomic policies. I think that came from the rise of tough competition for their export powerhouse from China and Korea. But at any rate, it's weird what's happening, and nobody knows for sure how it's going to work out.
So I think what Charlie says here is really important. He says, of course, if you print too much money, there can be terrible consequences, but it's not necessarily a guarantee. Japan have been printing money aggressively for quite a while now, and yet they haven't experienced any rampant inflation. Their inflation rate over the last 20 plus years has been at most 4%. Now, the immediate response to this is that Japan's economy and stock market have been stagnant for over 20 years. So if we don't have a massive recession or rampant inflation, then we're doomed to have a sideways stock market for the next 20 years like Japan. But Charlie has a different perspective on Japan's stasis. He believes it's because of the massive rise in competition for exports, which came from China, Korea, and Taiwan. When those three countries went through massive economic expansions, it really hurt Japan's export business. And Charlie believes this is the reason for Japan's stagnant market. So in summary, there's no predicting what will happen, and even Charlie doesn't know what's going to happen. He says in general printing too much money can lead to trouble, but I don't think he's too worried about the current market conditions. This is the other clip I want to show you, and this is the one I want to spend the most amount of time talking about today.
Writes in, he had similar concerns about inflation, but he takes it a step further. He says, how will this all play out, and what's the best advice you have for individual investors to optimally deal with the negative impact of inflation other than owning quality equities?
It may be that you have to choose the least bad of a bunch of options. That frequently happens in human decision making. And the Mungers have Berkshire stock, Costco stock, Chinese stocks through Lilu, a little bit of Daily Journal stock, and a bunch of apartment houses. Do I think that's perfect? No. Do I think it's okay? Yes. I think the great lesson from the Mungers is you don't need all this damn diversification. That's plenty of, you're lucky if you've got 4 good assets. I think the finance professors and the that sell the idea that perfect diversification is professional investment. If you're trying to do better than average, you're lucky if you have 4 things to buy. And to ask for 20 is really asking for egg in your beer. It's very few people can have enough brains to get 20 good investments.
This is the point I really wanted to spend time talking about because it perfectly sums up my thoughts for how to deal with inflation. If someone asked me how high inflation or low inflation affects my decision making or my overall investing philosophy, the answer is it doesn't at all. If your investing style being successful depends on low inflation or low interest rates or any sort of macroeconomic policy, then it's not an ideal investing strategy. Charlie highlighted it here perfectly when he said you just need a few great businesses, and no matter what happens with inflation or interest rates, you'll do okay over the long term. Wonderful high quality businesses will prosper in any market conditions, and if anything, poor market conditions sometimes allows you to buy these great businesses for a nice discount. Wonderful businesses like Amazon, Costco, and Apple will weather any economic storm. And it's the reason I always say that business quality is the most important aspect of my investing checklist. Charlie says the Munger portfolio has held Berkshire stock, Costco stock, Lilu's China Fund, and Daily Journal stock, and that's all he needed. I try to construct my portfolio the same way, and I just buy a few wonderful businesses that meet all my criteria, and I buy them for the best possible price, at most paying around fair value depending on how good the business is. Charlie even talks about Costco, which as we know is one of Charlie's favourite businesses. He says even though Costco stock is pretty expensive from a pure valuation standpoint, he says if he had a 50-year time horizon, he would still buy Costco stock at its current price.
Charlie, another question came in about Costco. Ami Patel from California, you recently talked about bubbles and high valuations in your Sohn conference talk. Is Costco a part of that? Costco has never traded at a higher price to sales or price to earnings multiple. How should new investors think about Costco given its record run?
Well, that's a very good question, and I've always believed that nothing was worth an infinite price. So at even an admirable place like Costco could get to a price where you would say that's too high. But I would argue that if I were investing money for some sovereign wealth fund or some pension fund, and a 30, 40, 50-year time horizon, I would buy Costco at the current price. I think it's that strong an enterprise and that admirable a place.
So it's a pretty clear indicator that Munger focuses much deeper on a business's quality, rather than fussing about its price and discounts and all the rest. Valuation is only important as a way to estimate a company's fair value. Otherwise, you have no idea what a business's true value is. And just because a business is trading for 50% of its intrinsic value, doesn't mean it's a better investment than a business trading at its intrinsic value. It's the quality of the business that matters most. Now, quality can be a matter of opinion, but to keep it simple, a quality business is a business that generates a high return on capital employed, with ample opportunities to reinvest those profits and compound the capital within the business. That's the secret sauce to long-term value creation. There are other definitions for being a high-quality business, but this one's the most straightforward and easy to understand, and it's the one Warren and Charlie use. So my investing philosophy is focus on quality first, and then once I've identified what I think is a long-term compounder, then I'll buy it for the best possible price. In terms of how inflation or interest rates affect my decision making, they don't affect me at all. There are many things that are out of my control, and the inflation rate is one of them. I try to focus more on things I can control. There's just no point trying to predict what will happen. And like I said before, if your framework for successful investing is based on macro conditions, like low interest rates or low inflation, then it's probably not the best investing strategy. The only things I think about regarding inflation are things I can control. Like, should I buy more AMD stock today, or should I wait a little bit longer to see if conditions get worse? And just in general, I try not to hold massive amounts of cash. I always have a bit of cash set aside for calamities and emergencies, but I never let it get too big. Anyway, I hope this video helped calm some people about everything that's been going on, because there's so much noise right now. And every single platform is full of end of the world videos. And honestly, I can't help but enjoy all the overreacting. At the end of the day, overreactions give me a chance to buy high quality businesses for a discount. So overall, my plan hasn't changed whatsoever, and I don't plan on making any changes to my investing framework. In my next video, I plan on talking in depth about what makes a business a high quality business. As you know, I talk all the time about companies being wonderful, and that a business being a high quality business is the absolute most important part of my investing checklist. And so you're probably wondering what makes a business a high quality business from an objective, fundamental, undeniable perspective. And that's what I plan on talking about in my next video with a few good examples. If you want to cast your vote on what business I'll analyze in that video, then check out my recent poll. And in that video, I also have a new spreadsheet to share for the fellow nerds that love spreadsheets. If you've enjoyed the video so far and you want to support the channel, I'd really appreciate it if you hit that like button. And if you want to see more videos like this one or join our community, then hit that subscribe button. And if you're still bored, I'll put another video up in the corner that I think you'll like. As always, if you have any questions, please don't hesitate to let me know in the comments below. If you've watched the video all the way to the end, thank you so much for watching. If you're new to investing and you want to learn how I invest using the Buffett-Munger framework, or if you just want to download and use my intrinsic value spreadsheets, then check out the free course on the channel. And as always, this video is not financial advice. Please always do your own research before making any investment decisions. Thank you so much for watching, and I'll see you guys in the next one.